I just want to have a very quick recording session with us, and I'm going to make sure that I actually hit straight to the point with one or 2 points I want to make. So something really happened on the US dollar index last week and last 2 weeks. Let me say from 3 weeks ago till date, you're going to notice something. And I just want to really help us to just, should I use the word pinpoint one or two important and interesting fact that you tend to come across whenever you are trying to trade. You know, most times when some persons are actually looking at the chart, there are so many information that comes to your mind. But the first thing you must be sincere or you must take to heart is, what is the next move that actually has the highest probability as it stands? Now, you're going to ask yourself, are we actually in a premium or discount? Is the market in an equilibrium state? Is the market ranging? Is it about to break out from a trend? Is it trying to trend? Just are we actually in a mid range, or maybe are we actually in an internal range liquidity, or maybe have we taken out an external range liquidity? These are some of the questions you must ask yourself. So with this video, I'm not trying to teach technical analysis. Actually, with this video, just should I use the word highlight what may have happened in the market for these past or these few weeks that actually some persons were actually ignorant about, or maybe they tend to trade against. And let's quickly go to the charts. Okay, I'm actually on the weekly time frame. So I'm looking at the weekly time frame because everything you need to know actually has its origin or reference from this very time frame as usual. So we'll have to look at important range within this market, and let's see where there's going to be a probability of turning around in the market. So if you actually trade in the Euro USD, expect the market to be bullish because the dollar index is coming down. So let's quickly look at something. If you look at this point, you're going to notice something. Let me make it black for this. If you look at this point, you're going to notice that there is this gap. Should I use the word gap, imbalance, whatsoever? We're not after the terminologies. We're after like trying to make sense with what played out in the market. So this candle succeeded this candle. This very candle here succeeded this candle. Let me just make it a bit brighter. This candle here succeeded this candle. They are both green, but something happened in between the first candle and this third candle. There is like a gap in between, so we know that as an imbalance or price inefficiency. And after this price inefficiency, the market did not try to close these. So, and after this inefficiency, we are looking at here. We look at these very points here. We know that definitely there are orders resting here because we remember on the weekly. So this is going to serve like an exit point for some persons to offload their orders. So a lot of order pairing will be going on around this external range liquidity. These are nice points that the market will tend to hunt. And in between these two levels, which is this imbalance here, remember the 50% of it. The 50% of it may serve as a very strong rejection of price action. So let's just mark it out. So, and actually I didn't measure this. Let me measure it for marking that stuff out. Okay. Somewhere around. Okay. I was a bit right. So let me take that out. So let's continue with what we're doing. So something really happened last week, which was the close of this very candle, and I literally knew that this just concluded week, which is the CPI week in the month of July 2024, I knew that the week is going to end bearish, definitely. Why? You have to pay attention to certain scenarios in the market. Now, I want you to take this to heart. Whenever you are trading the week, whenever you are trading, and on Saturday or Sunday you are trying to prepare the next week's trade, and you notice a weekly candle taking out the close, the high, the close, or the low of another week's candle, or maybe a minimum of 2 weeks candle, one single week candle took out or closed below them or above them, that should tell you that that trend will stand for the next week or the successive week. So let me actually show you what I mean by that. Now, this is let me use this simple one to mark it out. This is this week. This is the low. This is the low. This is not straight actually, bottom border. For now, we're not about precision. This is the low here. This is the low here. And what did you notice? You notice that the market came crushing these two low here without the market closed below this low and below this low. No matter what you think you will be doing, it's as far as you see this on the weekly time frame, is a very massive change of trend. Yeah, it's a very, very massive change of trend. Secondly, if it is not happening around the weekly breaker block or order block, it's sometimes called smash candle. 1 week candle closing below or above another 2 week candle, like 2 weeks candle. Each of this candle on the time frame is representing a week, and another candle representing a week. And in another candle that came out, maybe reversed the direction of those ones or went above or below it. If you want to see these things clearly, you maybe sometimes you use the line chart. So if you use the line chart now, you can really see the way the market just went down. It's just like, if you're looking at the line chart now, it's just like the market retraced into this level. If you see, it's just like the market retraced into this level, and from here we're traveling down. Now let's go back to the candlestick chart. So the problem is that you must learn to see it for what it is. Now, firstly, this is a block here. Yeah, this is a block here. And on a bigger picture, this is a block here. So this is a resistance. The market came here, tapped into this resistance, and went down. Remember, this is a weekly candle. So a lot is really happening here. Next thing, it came again, wicked into this block, which is equally a resistance, and reversed. Now, this candle, if you see this kind of candle, now we marked the low of this candle and we marked the low of this candle. So these two green candle, the low, and in one push, you saw a candle like this closing below their lows. To me, it's carelessness or ignorance of technical analysis if you are trying to buy this move, seeing this kind of radical close. Now, even if you go further, even if you try to go further, look at this. Look at this. What does that tell you? This is almost closing below the low of 3 weeks candle. It's closed below the low. Yeah. Look at this is the open and this is the close. Sorry, this is the open, and this is the close, and this is the high, and this is the low. So since this is the open of this candle, this one is closing below the low. Let me bring in something here so I don't confuse you. In a bullish candle, we want to see, if it's a bullish candle, we want to see the bearish candle close below the open of the bullish candle. And if it's a bearish candle, we want to see a bullish candle close above its open. Now take note of what I just said. Bullish candle, the market should be closing below the low. Bullish candle, the market should be closing below its open. So if it closes below the open, that is signaling an engulfing or a reversal. Bullish candle, bearish candle closes below the low. Now, a bearish candle, a bullish candle should close below the open. Let me just write this then down so I don't actually confuse you, or maybe get myself confused. So bullish candle, if it's a bullish candle, we want let me make this. If it's a bullish candle, we want the bearish candle to close. If it's a bullish candle, we want the bearish candle. Let me get this. If it's a bullish candle, we want the bearish candle. Sorry, I had to adjust my mic. If it's a bullish candle, we want the bearish candle to close below the open. Now, if it's a bearish candle, we want the bullish candle to close above its open. Open. This is the open of the bullish candle, and this is the close of the bullish candle. This is the open of a bearish candle, and this is the close of a bearish candle. So this is just the low, this is just the high. Just, you can revisit the video on the anatomy of a candlestick, video on the anatomy of the candlestick. So since in this scenario we are actually bullish, so the bearish candle close below the open. Now it closes below the open of candle 1. Even this candle 1, it went below its low. Did the same thing to candle 2, and the same thing to candle 3. So this is the open of candle 3. In one strike, it went below and closed below the open. Now this should signal a strong reversal. I don't care what is your bias or the depth of your experience in the market. The worst thing you should be doing in such scenarios, you are trying to hunt for a buy. Maybe like you are trying to buy, let me say, just like we saw this scenario now on the dollar index, and you are trying to, like, since dollar index is selling, and you go to the chart and you're trying to, like, buy the dollar. No, you are making or maybe trading the currency, any currency pair, and you are trying to buy the dollar. You are making a very big mistake. What you should be doing in this scenario, when you see something like this, you should be hunting for a sell, because it's one of the biggest indicator that it's a massive change in trend that has its origin from the higher time frame. And since it has its origin from the higher time frame, what does that tell you? That tells you that it's just like a falling knife. You can never catch it. You can never catch it. Now, personally, I'm going to believe that the market has actually reversed when we go to something like the 4 hours. Now, on the 4 hours, we were able to see a reasonable change in the state of delivery. Anything outside that, the market is still bearish. So, having said that, I think I've given enough hints just to you look out for it and some other times on the chart. Let's quickly jump to the Euro USD. Let's look at what really happened. The Euro USD. Not Euro currency, but Euro USD. So this is the Euro USD, for example. Remember that the dollar index was falling massively. So it will be very wrong of you to try to like sell the Euro USD. The euro should be strong since the dollar is falling. In other words, you should be buying the euro and selling the dollar. It's just like you aligning with the trend on the dollar index. It's a falling market. It's a falling knife. So let it fall. So let's quickly jump to the daily time frame and let's see something. So I've actually marked out this chart for the week. So what are we expecting? You see this? You see the way there's a trend line liquidity zone. You see the way the market closes above this very point. This is already a flip zone. This should have acted as our selling or our resistance. But the fact that the market closed above this level, which once supported the rejection of price, what does that tell you? We are now bullish. Remember, we're on the daily. So any further close above this level, will be the rate of this trend line liquidity. And what does that tell you? That tells me that our next target is going to be this level. It's going to be this level. So I just helped you to like simplify how to hold the higher time frame and actually swing through it. When you are trying to, if you are using TradingView and you want to look at the dollar index, I would prefer you use them TVC charts, TVC on the dollar index. So it really helps you to like see moves, mostly when it is coming from the weekly time frame. Yeah, when it's coming from the weekly time frame, it's going to be effortlessly reinforced on the daily. Now watch this day. This Friday. The last day here, the last candle here is Friday. This is Thursday. This is Tuesday. Sorry, this is Wednesday, and that's Tuesday. You just saw the way the market just went, reversed, traveled up. You dare not trade against such markets. Why? If you were actually paying attention to the dollar index, and you know that since we produced a smash candle. In 1 week candle, we destroyed 3 weeks candle move. So that means we're already bearish on the dollar index. We should now be looking for scenarios where we can continue that move. And it is best found when you see something like a daily engulfing candle. If you catch a daily engulfing candle. So what did we notice here? We noticed a clean daily engulfing candle. This candle closed. Remember what I told you about if it's a bearish candle, the bullish one should close above its open. And if it's a bullish candle, the bearish candle should close above its open. So since this candle closed above the open of this candle, what does that tell you? We are now bullish. So even this low can serve as your stop loss, and you can milk this move. Believe me, you can milk this move. Definitely, before we may see a bit drop in gravity of like gravity with which the market is actually soaring, we have to like read this trend line. Yeah, and it doesn't matter what you think about any concept in the market, you must learn to spot liquidity. There are so many traps. You have to learn how to spot trend line liquidity, internal range liquidity, external range liquidity. You must learn to see it. So nowhere there's a bit of orders, and there is this kind of confluence of trend line liquidity and order block here. So definitely this candle must spike into this level. It must definitely read this level. You see this level? Let me mark it out. It must definitely, price must definitely read this level. Yeah, before anything. So at this point, I'll be ending this video here. I think I have actually made it very long as something that I intend. I'll be ending at this very point. If you watch up here now, we had this equal high that has not been raided yet. So these are part of the magnet attracting price. And above this equal high, we had this imbalance. So these are things that are drawing price closer. Yeah, price is actually gravitating towards those points. And these are where pools of large funds are resting. And these are places where some big orders can get offset easily without distorting whatsoever. So at this point, let's call it a day. Have a nice day.